Hi everyone, today we're not walking through the glittering aisles of a jewelry store. Instead, we're diving into the opportunities of gold investments for NRIs. Before you start thinking, let me give you a sneak peek of what's to come ahead in this video. Why should you invest in gold? The different ways to invest in gold, points to consider before investing, and some common queries you might face. Oh, and there's one golden bonus section where I will talk about the taxes on gold investments. I know you're excited, but let's first explore a fundamental question. Why should you consider gold an investment option? First, gold acts as a hedge against currency depreciation. When inflation rises, the value of currencies takes a hit. But gold stands out. In the long run, almost all major currencies have depreciated in value relative to gold. When the value of US dollar fell against other currencies from 1998 to 2008, people moved to gold. The price of gold nearly tripled and reached $1,000 per ounce in early 2008. If you're not tracking gold prices, let me remind you that gold prices have doubled over the last 5 years. If we consider a 10-year time span, gold prices have quadrupled. 2. Gold acts as a safe haven during geopolitical tensions. Gold shines even brighter during uncertain times, serving as a safe haven for investors. Recent geopolitical tensions, from Russia's actions to trade disputes, have increased global unease. Investors find solace in gold, a tangible asset with a history of holding its value. Central banks in emerging markets are boosting their gold reserves, responding to a fractured world and concerns about economic stability. In 2022, they bought a whopping 1,100 metric tons of gold, far surpassing the annual average of 473 metric tons between 2010 and 2021. This trend is on a rise and could extend for years. Geopolitical worries, coupled with expectations of future Fed rate cuts, make gold even more attractive to investors seeking a reliable haven. Don't believe that gold is becoming more and more popular? Check out this headline. Gold gained about 19% in the last 5 years. Now, these remarkable figures make a compelling case for gold investments. I bet you're excited too. Before we dive into how NRIs can invest in gold, here's a tip. If your goal is an investment, choose options with liquidity, transparency, controlled costs, and assured purity. If you want to utilize gold for personal use, treat it as consumption, not just investment. You've probably heard headlines or discussions about sovereign gold bonds or SGBs. I'm willing to bet the investor inside you just got intrigued by this avenue. And why not? The returns on SGBs reveal a potential annualized earning between 4.48% to 51.89%, and that excludes the 2.5% interest provided by government for holding the bond. Before you get too excited, hold your horses. Here's the catch. While residents in India can explore the world of SGBs, NRIs unfortunately are not eligible for this investment. But if you recently changed your status from a resident of India to NRI and are worried about the investment in SGBs before attaining the status, don't worry, as you can hold on to your bonds until maturity or opt for premature redemption. Now let's address the main question. How can NRIs invest in gold? Well, there are essentially two types of gold investment you can explore: physical gold and paper gold. First, physical gold. When we talk about physical gold, we're referring to tangible assets that investors can physically hold. The primary forms of physical gold investments for NRIs first include jewelry. Of course, gold jewelry includes items like necklaces, rings, earrings, and other forms of jewelry. When investing in gold jewelry, NRIs need to consider not only the cost of the gold, but also additional expenses such as making charges and GST. Picture this. Priya wants to invest in a gold necklace of 10 grams. Assuming the current market price of gold is 4,000 per gram, the cost of gold would be 10 grams multiplied by 4,000, which is 40,000 rupees. Now, the making charges cover the craftsmanship and design of the jewelry. Let's say the making charges are 500 rupees per gram. So the making charges will be 10 grams into 500, which is 5,000. Let's not forget about GST, which is applied to the total cost of gold and making charges. Assuming a GST of 3%, the cost will be 40,000 plus 5,000 and 3% of that. Finally, adding up the cost of gold, making charges, GST gives a total cost of 40,000 plus 5,000 plus 1350 GST, which is 46,350. So Priya's total cost for 10-gram gold necklace would be 46,350 rupees. The second form of physical gold is bullion, which typically includes gold bars or coins. Investing in gold bullion involves primarily paying the market price without additional making charges. It's a straightforward investment in the raw material. Suppose Priya decides to also invest in a 10-gram gold bullion bar when the market price of gold is 4,000 rupees per gram. the cost of gold would be 10 grams into 4,000 rupees, which is 40,000. Unlike jewelry, bullion usually does not have making charges since it's a standard form of investment grade gold. However, it's important to note that gold coins may have some nominal making charges. So the cost here will be 40,000 rupees plus 2% of that 40,000, which is 800 rupees. Now GST is applied to the total cost of gold. Let's assume a 3% rate. So the making cost will be 3% of 40,000 plus 800, which is 1224. Finally, by adding up the cost of gold and GST gives the total cost of bullion, which will be around 42,024 rupees. So Priya's total cost for the 10 gram gold bullion bar would be 42,024 rupees. As the bullion doesn't typically have making charges, the cost structure is more straightforward for investors. Now, in both scenarios, the resale value is tied to the prevailing market conditions, and investors may experience gains or even losses based on the fluctuation of gold prices. Now, let's compare these two primary forms of physical gold investments side by side. Take a look at this chart. When deciding between jewelry and bullion, consider factors like the purpose of your investment and the associated costs. Whether you lean towards the craftsmanship of jewelry or perhaps the simplicity of bullion. Each form has its unique characteristics, distinct advantages, and of course, a few challenges. For instance, jewelry has three major advantages. First, it's dual purpose. You can use jewelry as an adornment, enhancing your personal style while also considering it as an investment. Second, jewelry often holds sentimental value. It can carry emotional significance passed down through generations. Number 3, the craftsmanship and unique designs of jewelry enhance its aesthetic appeal. However, there are some drawbacks to consider. First is that jewelry involves high making charges. Second, jewelry is prone to wear and tear. This can affect its resale value, especially if it undergoes any significant damage. And lastly, market trends and fashion preferences can impact the perceived value of jewelry. Bullion has its own set of advantages. Firstly, bullion involves minimal additional charges. Second, bullion is generally considered a purer form of gold, often without additional alloys or embellishments. Third, the valuation of bullion is straightforward. Its value is directly tied to the prevailing market price of gold, providing clarity in terms of investment value. However, there are some disadvantages to consider. The first disadvantage is its lack of aesthetic appeal and craftsmanship found in jewelry. Second, when it comes to resale, bullion may face challenges. Selling bullion may require specific channels and finding buyers can sometimes be more challenging. As you navigate the world of physical gold investments, consider these 3 points. Number 1, your personal preference plays a crucial role in the choice between jewelry and bullion. Number 2, diversification is an option. Some investors prefer a mix of both forms to balance aesthetic use and pure investment. Lastly, understanding the market conditions, trends, and resale dynamics is crucial to maximize the returns in the world of physical gold investment. Now, let's dive into the world of paper gold and explore digital gold, gold ETFs, e-gold, and gold mutual funds. Remember Priya who bought physical gold? Let's say Priya does not want to pay high making charges for jewelry, nor does she want the hassles of securely storing bullion, but she wants to continue investing in gold. In this case, she should explore other forms of gold investments like paper gold. I bet you must be thinking, why does she want to choose paper gold when she already has physical gold? Because of 3 factors. First is convenience. NRIs often prefer investments that are easy to manage from abroad. With digital gold, Priya can buy or sell gold at her own convenience through online platforms, eliminating the need to handle and store gold physically. Second is diversification. Opting for gold ETFs or gold mutual funds allows NRIs like Priya to diversify across different gold-related assets. Third is affordability. Priya realizes that purchasing more physical gold may strain her budget, especially with factors like making charges, potential storage costs adding up, etc. By choosing paper gold options like digital gold or gold funds, she can invest smaller amounts at a time, making it more affordable and flexible. This could even be done through systematic investment plans or SIPs in case of gold mutual funds. Please note that paper gold options offer accessibility, affordability, liquidity, transparency, and security. However, it also brings risks such as fraud and market fluctuations, among others. Luckily, SEBI barred brokers and registered investment advisors from selling digital gold due to a lack of oversight posing counterparty risk. Don't worry, you can still invest in digital gold but in a more regulated environment. Recently, SEBI permitted stock exchanges to seek approval for trading electronic gold receipts or EGRs, ensuring a regulated avenue for investors, including NRIs, in the digital gold market. SEBI also said that new and existing recognized stock exchanges may launch and deal in EGRs. Before we explore the world of paper gold, it's essential to understand that the categorization of financial instruments can vary across different platforms. Terms like digital gold, e-gold, gold mutual funds, and gold ETFs are often considered part of the broader category known as paper gold. In short, paper gold refers to gold investments in non-physical, paper or digital form. These allow investors to participate in the gold market without owning the metal. Now let's explore the specifics of each type of paper gold. The first type we explore is digital gold, which represents a modern electronic method of owning gold, allowing investors to buy a share of physically secured gold through digital platforms. This innovative investment avenue provides access to 24-karat hallmark gold. Let's say you want to invest 10,000 rupees in digital gold and you buy gold at a rate of 4,000 per gram. In this case, the amount of digital gold you own will be 2.5 grams. And remember, no making charges are added here. I bet you're curious to know how NRIs can invest in digital gold. NRIs can invest in digital gold through online platforms, facilitating easy transactions and ownership tracking. But you do need a demat and trading account when you invest in digital gold. Now let's move on to the next one, gold ETFs. A gold ETF is a passive investment instrument that tracks the domestic physical gold price, providing an easy way to invest in gold without the complexities of physical storage. Gold ETFs represent 99.5% pure physical gold bars, each unit equivalent to 1 gram of high purity gold. Gold ETFs are tax efficient and offer transparent real-time prices. Traded on stock exchanges like NSE, BSE, gold ETFs offer the flexibility of stock investments. They can be bought and sold through a broker with a demat account during trading hours. Let's discuss its benefits. First, purity is guaranteed. These ETFs are backed by physically stored high purity gold. Next, they're securely stored in a demat account, saving you those extra safe deposit locker charges. Plus, they're not just an investment. They can even be accepted as collateral for loans. Now, these are some solid sets of perks. Third on our list is gold mutual funds. Gold mutual funds pool money from multiple investors to invest in gold utilizing gold ETFs. These funds offer easy liquidity without the need for physical storage. You can also make periodic investments in gold mutual funds via SIPs. Let's better understand this, beginning with their investment approach. Gold mutual funds track gold price movements by investing in gold bullion or gold-related securities. Next, if we talk about their operational mechanism, these funds are open-ended, allowing investors to buy or sell units anytime with returns linked to ETF performance. Third is their unit representation. Like ETFs, units don't directly represent gold quantity. NAVs reflect the overall holdings value. Fourth, NRIs can invest in gold mutual funds through their NRE NRO accounts or directly with AMCs. Let's discuss pricing now. Unit prices are based on NAV disclosed at the end of trading hours. Lastly, don't forget the exit load. Please note that a fee may apply for redemptions within the lock-in period. Another type of digital gold is e-gold. E-gold, launched in 2010 by NSE, revolutionizes gold investment by enabling the electronic trading of physical gold. Each e-gold unit represents 1 gram of gold, offering investors a convenient and secure alternative to traditional gold ownership. Now let's highlight some advantages of e-gold. First off, ease of transaction. Buy or sell gold online effortlessly, providing convenience and flexibility. Speaking of safety, it eliminates concerns about theft or physical loss associated with tangible gold. What about purity? It's backed by physical gold of 99.9% purity. And lastly, e-gold enables fractional ownership, allowing investors to buy small amounts of gold. So how can you get started? You can invest in e-gold using your demat account. To sell it, you will need a trading account with designated NSEL dealers. This brings us to the end of this section. Now let's discuss taxes. Ever had that sinking feeling when an unexpected bill arrives just after you've treated yourself? Tax is that surprise bill showing up uninvited. But fear not. We are here to help you navigate the world of taxes. Let's start with the good news. The tax rate on gold sales for NRIs is the same as for Indian residents. However, NRIs must pay TDS on gold ETF or mutual fund redemptions. So no more confusion. But there are a few exceptions which I will explain now. First is physical gold. Now, if you're an NRI eyeing those shiny bars or jewelry, here's the deal. If you decide to sell within 3 years, that's short-term capital gains added to your total income tax and tax based on your individual tax slab rate. Hold on to that gold for more than 3 years. Now we're talking about long-term capital gains taxed at 20% along with a 4% cess. Second, paper gold, the modern sibling of traditional gold, and within paper gold, you get digital gold, gold ETF, etc. First, let's check on the tax implication for digital gold. It's not too different from physical gold, a 20% tax and a 4% cess on long-term gains for holding of more than 3 years. Well, along with gold ETF, even gold coins or bars and jewelry held for 36 months and more are treated as long-term capital assets. And for gold ETFs, the profits from their sale are taxed at a flat 20% rate after indexation, applicable to investments bought till March 31st, 2023. The profits made within the initial 36 months are treated as short-term capital gains and taxed at the applicable slab rates. Now, profits made from the sale or redemption of gold ETFs purchased after 31st March 2023 are treated as short-term capital gains akin to bank FDs. Remember that the taxes apply upon sale irrespective of the holding period. And short-term gains within 36 months are taxed at applicable slab rates. Third is wealth tax. If your wealth exceeds 30 lakh rupees from assets including jewelry, furniture and golden utensils, you're in the wealth tax category. Fourth is double taxation avoidance agreement. It's like your global pass to avoid being taxed twice on the same income. If you've already paid tax on capital gains in another country, flash that DTAA pass and you're off the hook in India. Last but not the least, tax exemptions. Section 54F of the Income Tax Act is your secret weapon against long-term capital gains taxes from gold sales. Here's the deal. If you invest the proceeds from selling gold in residential property, you might dodge those taxes. But there are always certain conditions. For example, you need to purchase the house within 1 year before the transfer date or 2 years after the transfer date. Or else you can construct the property within 3 years after the transfer. But wait, before you dive headfirst into the world of gold investments, there are a few essential points to consider. Now let's delve into some crucial points to remember before diving into the world of gold investing. Firstly, smart gold ETF investing. Choose ETFs with gold redemption options and full physical gold backing to minimize counterparty risks. And next, maintain a balanced portfolio with a mix of physical and non-physical gold, providing a hedge against market crashes. Here's the deal. While physical gold gives stability during market turbulence, non-physical forms like gold ETFs offer liquidity and flexibility. This balanced approach shows how investors can leverage the strengths of each, creating resilience in their portfolio. Moving on to hedge against inflation and currency depreciation. Embrace gold as a store of value, guarding against inflation and currency depreciation. Particularly for NRIs, gold serves as a shield against rupee depreciation, preserving wealth. Now, cost considerations for e-gold. Understand the costs of buying e-gold units, including brokerage, transaction fees, stamp duty, demat account charges, and the conversion expenses to physical gold. By now, I hope this video has answered all your questions regarding gold investments. If you still have any queries, stick to the next question where I answer the most commonly asked questions when investing in gold. Can an Indian resident keep NRI as a nominee under SGB scheme? An Indian resident can nominate an NRI under the Sovereign Gold Bond Scheme. If the investor passes away, the NRI nominee can receive the transferred security, provided the gold bond is held until early redemption or maturity, and the redemption proceeds and interest earned are not repatriated to India. How much gold can NRIs bring to India? NRIs residing abroad for over 1 year can bring gold to India free of customs duty in their bona fide baggage. The limit is 20 grams for male passengers with a value cap of 50,000 or 40 grams for female passengers with a value cap of 1 lakh rupees. For investing in gold in India, you need to have your KYC documents ready, including PAN and Aadhaar card. A copy of your passport may also be required. Mandatory submission of PAN cards is necessary for gold purchases exceeding 2 lakh rupees. To engage in ETF investments, NRIs need a brokerage account and a demat account with the same firm. Are there any fees involved in storing physical gold for NRIs? Yes, annual charges are associated with storing physical gold for NRIs, particularly in bank lockers. What options do NRIs have for transferring their gold investments to another individual? NRIs can gift or sell physical gold to transfer ownership. For digital gold or gold mutual funds, the transfer process is subject to the policies of their respective platform or bank. We have covered various aspects of investing in gold. Now let's do a quick recap. You have two investment choices based on your needs. First is physical gold, which is ideal for consumption. Second, paper gold, which is apt for liquidity, transparency, and control costs. NRIs can't invest in SGBs, but existing investments can continue until maturity. And for paper gold option, you also get digital gold, gold mutual funds, gold ETFs, and e-gold. Each has unique advantages, so research and consult service providers before investing. That's it for the video, guys. If you found this video helpful, please like it and share it with your friends. For more such NRI-focused, detailed financial videos, subscribe to Groww NRI. I'll see you in the next video. Thank you for watching.